So a week has passed, and it is absolutely official that Trump is going to be the next president of the United States. And we have been getting so many questions from followers. Some people are on one spectrum where they want to move out of the United States. They want help figuring out how to move abroad. And then we have people from the other spectrum that are really interested in how the economy may be boosted under Trump. So there's just a large spectrum of people that have many questions related to the next presidency. Now, this video is not political, but we think as investors, you just need to have a concept of how things may change in the future, short term with volatility in the stock market as presidencies change. So in this video, we want to talk about 3 specific things that Trump has cited that he plans on doing that may impact you as a US investor. So deregulation, tax cuts, and tariffs. Let's get into it.
I love this conversation because one thing that is apparent, under a Trump administration, the rich are definitely going to get richer. We've already seen that over the past week. The billionaires that are out there right now have just become even bigger billionaires. But it's important that you and me, all of the non-billionaires, the everyday folks that are investing, that are managing their finances, are also able to thrive in the Trump economy. And so it's important that you understand these concepts because they will apply to your everyday life.
So let's talk about deregulations first.
So one of the big things that Trump is going to do to boost the economy is actually deregulation. He feels like the government should not be involved in many aspects of the corporate economy.
So he's talking about looser reserve requirements for banks. This can actually stimulate more lending from banks, which could lead to more profits for banks too, impacting the whole financial sector.
He's also talking about deregulation for manufacturing, oil, gas, and renewables. Deregulation is something that is going to spur growth in these sectors of the economy. So if you are investing in sector ETFs that touch manufacturing, finance, industrial, or energy, it's important to know that these sectors may do better under a Trump administration.
So in terms of deregulation, it's really important to note that sectors that typically face heavy regulation burdens, so things like energy, financial services, manufacturing, they could all benefit significantly from Trump's goal to push for the most aggressive regulatory reduction in US history. So this basically means lower operating costs and increased profitability, which can drive stock prices higher in these industries. So let's talk tariffs. So tariffs are taxes on imported goods, and Trump is proposing a universal baseline tariff of 10% of all goods imported into the United States.
Now, if you recall from Trump's last presidency, tariffs were market movers. Whenever he came out talking about putting more tariffs on China, you would see the stock market move in various directions. Now, when it comes to tariffs, there are winners and losers in the US economy. Now, because tariffs are used to encourage US companies to bring manufacturing back to the US, companies that have a substantial amount of manufacturing outside of the US, these are the companies that will be hurt most by tariffs. So you see, Trump's goal with tariffs is to protect domestic industries, create jobs, and reduce a reliance on foreign manufacturers, particularly from nations like China. Now, Trump has argued that higher costs on imports would incentivize businesses to produce domestically, thereby boosting the American economy. But for our investors, let's talk about the stock market implication of tariffs. So companies dependent on international trade, for example, tech companies that rely on folks like China for their manufacturing components, might see higher cost and compressed margins, potentially driving the stock price down. You will see this on their earnings call when they talk about their increased costs due to tariffs. These tariffs are going to reduce their profitability. And the stock market is not going to reward companies like this that depend so much on foreign manufacturing. You may see these companies' stock prices start to dip when Trump starts to introduce new tariffs.
Now, on the flip side, for domestic-focused industries, these companies may actually gain a competitive edge over those companies that are really relying on manufacturing outside of the United States.
The last big thing are corporate tax cuts. And this is very synonymous with most Republican-led administrations. They're always looking to cut corporate taxes with the belief that by doing this, it will spur other areas of the economy. It's the top-down approach to the economy.
So it's basically this idea, if you provide tax cuts to businesses or people that are on the wealthier end of the spectrum, they have more money to spend, they spend more money, they stimulate the economy, and it trickles down. So one thing to note specifically about corporate taxes, if they are reduced, companies can retain more of their earnings, which can then be reinvested back into growth initiatives, dividends, or even share buybacks. So industries with typically high tax rates like retail or small cap companies, they could benefit a lot from these corporate tax cuts, and there's something that you may want to keep an eye on as you're thinking about investing in the stock market. So deregulation, tariffs, and corporate tax cuts. Those are three things that you might want to look more into as you're thinking about your investment portfolio and how this new presidency may impact the stock market. Now for us, our plan is always to have a long-term approach. So you may see more volatility in different sectors and industries in the stock market, but if you have a long-term plan, that's the type of plan that will help you grow your money over the long run. So this is just food for thought, some things to think about. And of course, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.